What is up, guys? This is Derek again. Hope you guys are having a wonderful morning. Today is February 4th, 10 a.m. And in this video, we're going to be going over rectangles. We're going to be going over patterns. All right. So, this is the first pattern that we're going to be going over. And basically, um, patterns occur all over the market. They occur on any time frame. They can occur on weekly, daily, H4, H1, as low as the 5-minute time frame. And basically what a pattern is, it's a type of consolidation. Like in phase two, we went over zones and consolidation and what an uptrend is, what a downtrend is, and what consolidation is. It basically means that price doesn't have enough pressure or momentum to break out towards the top side and an uptrend, and vice versa towards the downside, a downtrend. And that's what consolidation, but it comes in many different shapes. That's what this phase is completely about. Different type of patterns, and each pattern, they give more of a bullish inclination or a bearish inclination. So when you see a pattern, it could be a confluence or another confirmation that price wants to buy or price wants to sell. When it comes to rectangles, rectangles are one of those few patterns that are actually indifferent. So what I mean by that is these are trending. So whatever it came from. So if it came from an uptrend, they would typically break out towards the top side for an uptrend. If it came from a downtrend, they would typically break out towards the downside to continue being bearish. The rules to this has a flat level of support and a flat level of resistance. Okay? Another rules to it. 2 touches off of a level of support can possibly turn into 4 touches. Okay? 2 touches off a level of support can possibly turn into 4 touches. The same way that, and I'll show you exactly what I mean by that. When it comes to how to trade rectangles. So how to trade rectangles. Trade within the pattern itself, or try to trade the continuation breakout. So I'm going to show you exactly what all this means so you guys could understand it a little bit better. So these are the rules, okay? Those are the rules to the market. Those are the rules to this particular pattern. We're going to go on GA, so write this down. I'm going to have it for you here so you guys could see it, exactly what I'm talking about. And when it comes to rectangles, it looks like this. So if it came from an uptrend, what a rectangle basically is a flat level of resistance, flat level of support. And what I mean that once it does its 2 touches. So once it does its 1 touch, 2 touch, because this is a level of support. Once it does its 1 touch, 2 touch, we can predict that it's going to do a 4th and 5th touch, typically before it continues to break out towards the top side or before it actually does something. That's what I mean by it. So once it does 1, 2, we can more than likely see it go for a 3rd and even 4th touch on that same level of support before it continues to break out towards the top side or break out towards the downside. All right. So I'm going to show you how to trade this. Again, the most important thing when it comes to trading is what? It does not matter about the trend. It's what? Where am I located in the market? That's the most important thing when it comes to this. Where am I located in the market? Okay. And I'm going to show you a prime example of what I'm saying by that. So here we have a rectangle. This was last year, I think like April or May. Let me see. Yeah. And the reason why I remember this is because this was like the only pair I traded for about a good 4 to 5 weeks. This was the only pair I traded. And I didn't need to trade anything else. And you'll see why. Because price literally formed a perfect rectangle. It did 5 touches towards the top side, 5 touches towards the bottom side. And I literally just bought and sold at the highs and lows. This is when people say buy high, buy low, sell high. And this is what I mean by it. Since we're doing off the daily time frame, understand that one of these candles or one of these pushes is worth a lot of pips. People forget that. One candle of the daily time frame is worth a whole entire day's worth of pips. So if you're able to catch that, it's a lot of money. Now, I'm not going to sit here and say I held it for the whole entire 272 pips. I didn't. But let's say I caught 100 pips. Let's say then the next day I caught 80 pips. It was consecutive pips for about 4 to 5 weeks. that all I did was trade this pair. This is all I did. And very simple. What did I do down here? I bought it. What did I do up here? I sold it. What did I do down here? I bought it. What did I do up here? I sold it. And once you guys go into phase 4, which is price action and candlestick analysis, you guys are going to see exactly what I'm referring to. Like, let me show you. So once you go into phase 4, which is price action and candlestick analysis, you guys are going to see different reasons why this sold. It's extra confirmation. Besides being on a supply and demand zone, which is the most important thing. Understand, this is not resistance and support. This is supply and demand. This is where price and institutions like to push the market towards, so then price can reject off of. They're stronger zones, and they can only be found on higher time frames. You can't find these zones on H1. They have to be done on H4 daily and weekly time frames. All right, so this is a perfect example of a rectangle and how to trade it. You're literally buying low and selling high. And now you could try to trade the breakout if you choose to. If you choose to, you can try to trade the breakout before it actually even does it. Or you can just wait until it breaks out and then does a break, retest, entry, then for a sell. That'd be the most safe. That'd be the safest way to trade the breakout. Because you can try to predict a break of structure, or you can try to predict that a price is going to break a certain pattern, break a level of consolidation, but you never really know. You know, nobody knows what the market is going to do. This is all probability based. So I like to take the highest probability trades, and consolidation is perfect. People always say, oh, never trade a consolidating market. That is not true, because understand, this is on the daily time frame, right? But on H1, those ups and downs, those are actual uptrends and downtrends. You understand what I'm saying? So those ups and downs that we went over, those are actually uptrends and downtrends. Again, that was on the daily, but this is an uptrend on a smaller time frame. Think about it. This is worth like 6 days. Think about it. From March 20. So from March 19 to March 28, it's about 10 days worth of data. That's not an uptrend. Of course it is. So on the daily time frame, it's consolidating, but on H4 and H1, it's actually uptrending. Then when price breaks it, from the 28th to the 30th. So in 2 days, that's not a downtrend? Of course it is. We're intraday traders. The way I'm teaching you is an intraday style of trading. So this is very simple. Again, rectangles are some of my favorite patterns to trade. Why? Because it's super simple. Buy low, sell high. You can TP at the high, or if you want to TP sooner, you can. There's nothing wrong with securing profit. But consolidation patterns like a rectangle can be traded. We're going to be going into other different patterns later on throughout this particular section of the course. And you're going to see that you could trade them within the pattern, and you could trade the breakout. When it comes to rectangles, I recommend just trading within the pattern. Once it breaks out, then you do break retest, and you do a continuation versus whether it's a reversal or whether it's a continuation of the current trend. You know, but that's the safest bet. But again, you can find this on every time frame. It honestly does not matter. You can find this on Euro USD. You can find this on gold. You can find this on anything, guys. You can find this on any time frame whatsoever. You would be able to locate this. You just have to be able to look for it. Okay, but on any time frame whatsoever, you'll be able to locate this. I promise you, on any time frame. Here, right here, even itself, you kind of have like a consolidation. You can kind of see it. You can kind of see the rectangle pattern. Remember, support and resistance, supply and demand zones, they're zones. It's not price, so it's not 100. It's 95 to 105. All right, guys, I'm out.